Circular 230 has two big fee landmines: unconscionable fees and contingent fees. Unconscionable isn't precisely defined, but think grossly disproportionate to the work performed. On the EA exam, they'll describe a simple service with an outrageous price and ask if it's allowed. Your job is to spot the word unconscionable equals prohibited, even if the client agreed. Next, contingent fees. Classic example is, I'll take 25% of your refund. Circular 230 generally bars contingent fees for preparing an original return. It can also be contingent if it's based on taxes saved or depends on achieving a specific result. Exam tip: if you see original return plus percentage of refund, your default answer is no. But contingent fees aren't always forbidden. Circular 230 allows them in limited, very testable situations. You can charge a contingent fee during an exam of an original return. You can also do it during an exam of an amended return or refund claim if that amended return or claim was filed within 120 days after the taxpayer got a written exam notice or written challenge. And contingent fees are allowed for certain refund claims tied to penalties or interest and for judicial proceedings under the code. Now the curveball: Ridgely versus Liu. A federal court said Treasury lacked authority to regulate contingent fees for ordinary refund claims filed after the return, but before an audit starts. The IRS didn't appeal and hasn't clearly accepted it either. Translation for the EA exam: proceed with caution. If the question is clearly testing Circular 230's listed exceptions, follow Circular 230. Don't overthink Ridgely unless the fact pattern screams ordinary refund claim, no audit. Switching to marketing. Circular 230 bans advertising that's false, deceptive, or coercive. That includes exaggerated promises like pennies on the dollar when it's not realistic. Another favorite exam trap is how you describe being an enrolled agent. You can't say you're certified, and you can't imply you work for the IRS. Safe language is enrolled to practice before the IRS, or enrolled to represent taxpayers before the IRS. Mail and e-communications are allowed, but they come with housekeeping rules. A solicitation must be clearly labeled as a solicitation. If you used a list or source to choose recipients, you may need to identify that source. And if a person tells you to stop contacting them, you stop. The big exam number is retention. Keep a copy of the direct mail or e-communication and your recipient list for 36 months. Finally, fee schedules and logos. You can publish a fee schedule, fixed fees, hourly rates, ranges, even an initial consultation fee. But once you publish it, you must honor it for at least 30 calendar days after it was last published. For radio or TV fee ads, record the broadcast and keep it for 36 months from the last transmission. And logos? Authorized e-services providers may use the IRS e-file logo, but practitioners cannot use official IRS insignia. Marisol is an enrolled agent who offers refund anticipation loans along with tax preparation. Her client, Derek, requests a refund anticipation loan. The question asks, the contract for a refund anticipation loan is between which parties? Is it between Marisol and Derek, Marisol and the IRS, Derek and a lender, or Derek and the IRS? Think about it. The correct answer is between Derek and the lender offering the loan. A refund anticipation loan is a third-party loan based on an expected refund, so the lender is the one contracting with the taxpayer. The tempting wrong choice is Marisol and Derek, because she's facilitating it, but she's not the lender making the loan. Here's a Circular 230 mail advertising question. All of the following statements are correct about a practitioner's right to advertise by mail, except one. The options include labeling the solicitation, sending solicitations to other practitioners, keeping recipient lists, and a statement about keeping a copy of the ad for at least 1 year. Which statement is the exception? Think about it. The exception is the 1-year retention rule. Circular 230 requires longer retention. You keep a copy of the direct mail or e-communication and the list of recipients for 36 months. 1 year sounds reasonable, which is why it's tempting, but it's not the Circular 230 standard.